Now, this is where a millionaire trader's made, right? If you want to be the cutting edge, you don't want to buy the rips, meaning once something breaks and rips higher, you don't want to be that person buying the highs. That's called FOMOing in. People that FOMO in lose all their money. All right, ask anyone that does it. It doesn't usually work out well. Sometimes it works out okay. More often than not, eventually you get burned doing it. What you want to find is the chart that is getting ready to go parabolic. And I'm not saying this is necessarily going to go crazy to the upside, but what I'm very carefully watching is this right here, right? You have a very clear downsloping wedge pattern, and downsloping wedge patterns to me are very bullish when they're at the lows. Essentially, price is being constricted more and more and more until you want to see a breakout. The breakout level is $9. If this gets above $9, I think it goes back to 12, maybe even 15.
Gareth Soloway will take us deep inside the present status of the markets today. Soloway will guide us through the NASDAQ, Dow Jones, and S&P 500, pointing out important technical patterns and levels. He also will discuss his opinions on Bitcoin, gold, and oil, as well as the reasons some assets are underperforming in spite of significant geopolitical pressures. You may get ready for any large changes in the upcoming days with Soloway's unique perspective on wedge patterns, market consolidation, and the importance of confirmation in technical analysis. With his signature approach to technical patterns, Soloway will break down why he's watching certain key price points and what they could mean for the markets ahead. Let's head over to the big board to see where the action is. And don't forget to like this video, subscribe, and turn on post notifications for more insightful breakdowns like this.
Follow me over to the big board here. Let's take a look at what is going on in the markets. So what we have is an S&P, you can see in the Dow Jones Industrial, and even in the NASDAQ, essentially flat to green on the day, right? Yesterday we had a nice little sell-off. Today we're seeing a much quieter day. 67 points higher on the Dow, 32 on the NASDAQ, and just 4 points on the S&P, eking out that small gain. Now looking down here, this is where things get more interesting. Oil right now is fractionally positive. It was up more early in the day, but what we did see is kind of a fade as the escalation, we didn't see that major escalation today like we did yesterday. In addition, if you've been following my analysis, we know oil was still below the major technical level, and therefore, obviously, what we're seeing here is a market that is kind of, still bearish on oil, frankly, even with what's going on in the Middle East. Gold today down $5, basically a flat day there, and then Bitcoin really struggling still. Amazing how much Bitcoin is struggling, down about 500 points today. All right, let's get into some of these charts here, folks, as we take a look, and let's see what we have. So the S&P 500, if we flip over to the charts, look at how quiet this action was today. Here was your little gap down and drop, and then we went up, and then look at how quiet. And what we can do here is we can draw and connect these lows. Really remarkable, right? So we have essentially what would be referred to as a wedge pattern, which essentially is telling you you're consolidating. You have your highest point here, your lowest point here, and then the rest of the day was inside of that range. It's coming to a head. This tells me there could be a major move either tomorrow or Friday, breaking us up or breaking us to the downside. Now, if we flip over to the daily chart, let's do that right now, we can see that we are still just hovering a little bit off the all-time highs. And for me, at least, the only level where I would flip majorly bearish would be as if we got below this line. Why is this line important? Because it's the previous all-time high before we took it out. So you have a breakout, technically speaking, a breakout here. You don't want to see a breakout fail. If you start trading below this area here, that would be extremely bearish, and you'd see the algos start to sell heavily, and the market would likely drop. My guesstimation here is we would very quickly fall down to this lower level right in this range. That's around 5,250 on the S&P or 525 on the S&P 500 or the spiders here. Going quickly back to the charts, let's take a look at gold. Gold today flat on the day, nothing much going on there. Everyone waiting for those jobs numbers, and even silver up just slightly on the day. Oil today, if we look at oil hit off that trend line. How many times have we talked about this trend line? Goes right up there, gets rejected again, even in spite of all the tensions in the Middle East and the escalation. It still comes right back in, basically flat on the day. And then lastly, natural gas. With members of Smart Money stocks and ETFs. I did add to this short position today beautifully when we were at the high here. And again, we've pulled back just a little bit. It does not appear we'll confirm a breakout today. Doesn't mean we can't confirm tomorrow, but at this point, it doesn't look like we'll confirm today, all right? Without confirmation, it could be a fake out. We'll always remember that, guys. Always remember, confirmation to me is the end-all, be-all of whether it's a real breakout or a fake out. And don't think those institutions aren't licking their chops, looking at you and saying, oh, man, I hope we can convince millions of traders to jump the gun and stop out of their shorts and go long just so we can whip it the other way. Not saying that that'll happen, but it does happen from time to time. In fact, very often when you don't get confirmation.
Understanding market psychology and the risks of following trends aimlessly are key components of Gareth Soloway's analysis, which goes beyond simply looking at the numbers. He warns about the frequent trap of FOMO, fear of missing out, in which investors buy equities that are skyrocketing in value, which frequently results in significant losses. As an alternative, Solo will suggest a more methodical strategy that entails holding off until there are distinct technical patterns that suggest a possible breakthrough or reversal. Gareth will also stress the need of searching for unloved assets, which are typically underinvested and offer special chances for traders who are prepared to put in the necessary research. With this viewpoint, investors can profit from assets that others might ignore or steer clear of because of unfavorable opinions. He makes reference to his accurate gold market forecasts from earlier this year when he saw that gold had a chance to scale. Let's listen to what he has to say next.
Now, one chart that I was eyeing today, take a look at this chart, guys. One of my favorite charts. In fact, I'll walk over to the big board to kind of go over it here. Let's take a look at this now. This is WBA, Walgreens Boots Alliance. Now, again, if you're in the U.S. or even if you're in areas of certain around the world, you're probably very familiar with Walgreens. Now, listen, they've been struggling. In fact, if you go back to, I think, about 10 years ago, the stock is down 90% from its highs 10 years ago. If you just go back to the beginning of this year, down 66%. Now, this is where a millionaire trader's made, right? If you want to be the cutting edge, you don't want to buy the rips, meaning once something breaks and rips higher, you don't want to be that person buying the highs. That's called FOMOing in. People that FOMO in lose all their money. All right, ask anyone that does it. You know, it doesn't usually work out well. Sometimes it works out okay. More often than not, eventually you get burned doing it. What you want to find is the chart that is getting ready to go parabolic. And I'm not saying this is necessarily going to go crazy to the upside, but what I'm very carefully watching is this right here, right? You have a very clear downsloping wedge pattern, and downsloping wedge patterns to me are very bullish when they're at the lows. Essentially, price is being constricted more and more and more until you want to see a breakout. The breakout level is $9. If this gets above $9, I think it goes back to 12, maybe even 15. It's also a stock where you could see an activist investor get involved. I know even with CVS, that's been going on just a little bit. So watch this at a break of $9. Beautiful wedge pattern, again, constricting price at the lows, multi-year lows, decade lows, in fact, going back to like 1990s or something like that. Watch to see if we get a breakout. And by the way, one of the things to keep in mind is this is how I find these plays, folks. People always are like, man, how did he know that, gold was going to rip to 2,500 when it was at 19 to 2,000 early, start of the year? Well, again, I love to look at assets that are unloved because it means they're underinvested. And these are the things that make millionaire investors and traders. You have to be someone that's willing to analyze, to do your research, study the charts, and even look at things when everyone else is telling you it's a horrible idea. I know it's crazy, but sometimes going against the crowd can actually be really profitable. Another great example, China. All right, everyone wants to claim, oh, they knew China was going to go. Yeah, right. Give me a break. 2 weeks ago even, I was talking to you guys about China and the comments that I saw. He's crazy, China, you can't invest, it's uninvestable. Here we are, PDD, Pinduoduo, up like 60% in 2 weeks. I mean, by the way, that's like $100+ billion company. That's not a small move. It's not like a small cap going up 20% or 50% or 100%. $100 billion company surging 60% from peak to trough. So you got to take these shots. And again, listen, you don't have to take them in a heavy manner, right? It's not like you have to say, oh, well, I got to go all in. In fact, that's the stupid thing to do. Because for number one, you don't know if you're at the lows. It could go lower. You could be early to the party. and you could be looking at other things.
As this part comes to an end, it is evident that Gareth Soloway's observations highlight how crucial it is to trade with a keen eye for detail and a calculated approach. Using Walgreens Boots Alliance as an example, he shows how equities that have had large losses but could be ready for a recovery can still present attractive investing opportunities. Solo pushes viewers to start trading with discipline by stressing the risks of FOMO and the need of spotting bullish patterns, like the downsloping wedge. Furthermore, his focus on seeking out assets that are undervalued supports the notion that investing against the trend can be a successful long-term strategy. His technique is further validated when he uses current examples from the Chinese market to show that even big established companies can have major price swings. In the end, Solo reminds us that trading shouldn't be based on reckless speculation, but rather on market study and a readiness to defy convention when the chance presents itself. By adopting this mindset, traders can position themselves for possible success, ensuring they are not merely responding to market movements, but actively seeking out chances that correspond with their plans. If you found this conversation insightful, be sure to like, share, and subscribe to stay updated on the latest developments in blockchain and decentralized technologies. Thanks for watching, and we'll see you in the next video.